Hey everyone, hey DeFi Dad.
Hey Rahilla, how are you doing? Good to see
I'm doing
everyone.
well. I'm in Atlanta right now. So yeah, I think we're ready to get started. So this panel is on yield farming, and we have some really exciting guests that are playing a major part in yield farming. First, I'll start with Keegan Selby, who is the co-founder of new fund called Fourth Revolution Capital. And I'll give you the first question. There's been so much hype around yield farming. A lot of people see it as something similar to the ICO bubble that popped in terms of all the crazy returns. How do you see it as playing an important part to the Web 3.0 ecosystem that we're building? And how do you differentiate between what's real and what's hype?
Yeah, sure. So thanks for having me, Rahilla. Good to see you guys. Familiar, friendly faces all around. Maybe I'll start by just summarizing what yield farming is exactly, and why it's become kind of such an important, attractive, and kind of mutually beneficial mechanism for token distribution. And that's kind of for both farmers and protocols alike. So from a protocols perspective, yield farming is most often used now to incentivize liquidity and distribute that platform's native governance token. So for liquidity, you can use it for things like collateralizing the synthetics exchange, providing liquidity for trading pairs on Uniswap, incentivizing borrowing and lending on money markets like Aave, or simply like Barnbridge, like Tyler can tell you about, just getting the token out into the ecosystem, into the hands of your end users. I think from a yield farmer's perspective, it's as easy as a way to put your tokens to work and earn yield on those tokens. And that yield can be kind of denominated in the native governance token for the platform, or simply the token you deposited, like on Compound. Maybe I can just walk through Compound as an example real quick to give some people some kind of clarity on exactly how they're using yield farming. They were actually one of the first projects. They launched their Comp token in June of this year, and they used it to incentivize both borrowing and lending. So that was kind of a first. It's fairly traditional for lenders as a depositor. At Chase, you receive interest in your savings account. They use those funds to lend them out. But now for the first time, borrowers were actually earning comp for borrowing on the platform. And you can kind of think of it, like my favorite analogy is like a rideshare app, like Uber, bootstrapping both like drivers and riders on the platform by coming up with like a micro share equity strategy where they reward both drivers and riders with micro shares of Uber equity. And that bootstraps both sides of the marketplace and really gets them off the ground. I think your second question was how to distinguish between kind of like risk profiles between different yield farms. I'd say like the main two things you want to look for as a yield farmer when kind of analyzing risk is, one, do you have to buy the governance? Do you have to buy the token to farm it? In that case, you want to make sure that despite however many thousands or 100,000% APY that you can generate by farming the token, if the actual token depreciates to a point where your total earnings from yield farming are worth less than the initial investment that you used to start yield farming, then obviously that was a net loss venture for you. The second risk that I'd probably call your attention to is impermanent loss. So on AMMs like Uniswap and Balancer, IL is just the additional risk or the additional loss that you get versus hodling the token from all the kind of liquidity and the trading that goes on that platform. So if you have impermanent loss, you want to make sure that IL is offset by your rewards from yield farming, and that you're not ultimately operating at a loss there on that strategy. How's that work for you, Rahilla?
That's good. Thank you, Keegan. And my next question is for Tyler Ward. You're the co-founder of Barnbridge, which is one of the most exciting projects that people are yield farming. And I was really amazed that within days you had $500 million staked on it. If you could tell us more about like why you decided to start it and what your goals are for it.
So I appreciate it, Rahilla, and it's good to see familiar faces as well with everybody on here. I would say the reason that I started Barnbridge to really boil it down is that I wanted to use the product myself. Like what's currently going on isn't the actual product. It's just, it's essentially a way to distribute the tokens to the ecosystem. Very similar to what Keegan was saying, like in the early days of like a ride sharing app, like it would be similar to if Uber had given the governance to like both ends of the users on the platform. A little bit different than what we did with Comp though, or like a Uniswap, was that Comp's a better example. We distributed our tokens, at least like the first 50% of the tokens in a much different way than a lot of the other projects in the ecosystem. And it really just has to do with like when we came into the market. I think when like Compound originally did their like first funding rounds and were like funded by Coinbase, like when Synthetics did their ICO, it caused kind of the first grouping of governance to be a little more centralized, and that will change over time. But then you have groups like YFI where like Andre didn't even keep any of the governance whatsoever. So I think one thing that sets Barnbridge apart is it's a little closer to being in the middle in terms of like the actual distribution of governance. Like we didn't keep a massive amount. It still will be a community run project. But the way that we needed to get the tokens out into the ecosystem to have it be a community run project very early on was we used a proof of capital distribution, very similar to, like how Bitcoin uses proof of work, how Ethereum uses proof of work. And I know a lot of people criticize yield farming in these proof of capital distributions. I think the reason for that is because it seems like it's unsustainable. And it is, I guess, eventually unsustainable that you need enough good ideas to come into the ecosystem to warrant that these governance tokens would be perceived as having like any type of long-term value. But I would argue that the need for capital on a layer 2 platform like a DeFi protocol, capital is as needed as like the security that's provided by like cryptographic puzzle solving. So I just think the way that we're distributing tokens is a little bit closer to proof of work as opposed to having done an ICO. And that's like the main thing I would say about yield farming. As far as what Barnbridge is, it's a tokenized risk protocol. So it's a way to move in and out of risk across the DeFi ecosystem. We don't actually do any like lending or borrowing. We're just essentially integrating on top of other DeFi protocols and their like native token and assets, so that you can basically say, I want to take a low risk position in this farm. I want to take a high risk position in this protocol, et cetera, et cetera. And I think there's a lot of really cool things that you can build off of that primitive over time.
Thank you. And DeFi Dad, you're the COO of my favorite new way to manage my crypto assets, Zapper.fi. If you could talk a little bit more about that in terms of the features and how you see it playing a part in cryptocurrencies and having more mainstream adoption, because it definitely is user friendly and has amazing UX and UI.
Yeah, no, thanks, Rahilla. I feel like I need to send you that ether now. Thanks for saying that. So Zapper, which is Zapper.fi, it's a hub for tracking your DeFi portfolio, but it also acts as a gateway to participating in DeFi. It basically gives you access to what we call Zaps. And I mean, it's as simple as just deposit a token here, and then we will do all the magic of, swapping that token for other tokens and maybe adding it to a liquidity pool so that one can earn yield. So I think with Zapper, like part of the reason that Zapper, I think our team has seen a lot of success is, at the end of the day, DeFi is about all these different protocols. which are really just, more simply said, it's applications. You want to be able to track your money and what it's doing. Like, are you making more money? Are you losing money? And so anyways, you just plug in your Ethereum wallet and then you can track all of that. The thing that I think we're trying to build towards in terms of a future for DeFi is the idea is to make it accessible for everyone, to not reinvent all of the same problems with legacy finance where it is only available to those who are incredibly financially literate and spend all their time looking through all these strategies, thinking about how to make their money make money. So, I know we think a lot about protocols like Wire and .finance, where you're taking a strategy, often a very complicated strategy with multiple steps, but you're automating it all through smart contracts. And all you have to do is deposit a token. And at that point, you have truly made all of this that much more accessible. So, I think like right now with Zapper, what we're thinking about is, how do I make DeFi easy? How do I make it so easy that, your mother, your grandmother, your grandfather, whoever can easily use this as long as they can manage an Ethereum wallet?
I think on the note that you mentioned in terms of financial inclusion, my next question is for Keegan. Stablecoin adoption has just grown all around the world, from like Africa to South America to the US. Is it just the wealthy in terms of, people kind of perceive yield farming sometimes as just those that have lots of crypto or can buy lots of stable coins to stake? Do you see a future where an everyday holder, whether you're in India or, just a small holder somewhere in the US, like you could benefit from this?
Yeah, so this is a huge topic. I wrote an article called "The DeFi Narrative" that kind of goes, if anyone's interested in a deeper dive. But I think it's important the way that you frame the question with that it's truly global by nature, and that's simply because of the fact that anyone with an internet connection can access Ethereum, and in doing so can access stablecoins and can put those stablecoins to work in any of the various DeFi protocols to access financial products and services, and one, preserve the value of their wealth, and two, grow it. So I think kind of like backing up, like what stablecoins are, we talked about kind of what yield farming is in the big picture. Stablecoins really solved the classic problem, the first use case for crypto as a medium of exchange. For example, like no one wants to use Bitcoin or Ethereum to buy a cup of coffee. And that's because you might end up like, I think his name was Laszlo. He was a guy in Florida that bought 2 Papa John's pizzas with 10,000 Bitcoin in 2010. Clearly, he regrets that transaction now, considering where the price of Bitcoin is trading today. But ultimately, users and businesses can now leverage kind of the cost, the speed, the security advantages of blockchain technology and cryptocurrencies without the volatility risk that hampered cryptocurrency usage for payments in the first place. So back to kind of like what the differences are here in the U.S. versus what value this provides globally. So for Americans, we have a massive advantage too. It's a small portion of kind of the game changer that stablecoins provide for countries with kind of hyperinflation like Venezuela, Iran, Sudan, Haiti, etc. But even in America, you can earn 3 orders of magnitude, like 1,000% more interest on U.S. dollar pegged stablecoins by depositing them into money market and centralized money markets like Aave than you can in like a Chase savings account. Like Chase is currently offering, if you Google it, the savings rate is 1 basis point. That's $10 for every 100 grand that you have in your savings account at Chase, which is a little ridiculous, right? And now by kind of disintermediating that whole Chase P&L with their 5,000 branches and everything else, all the other expenses, you can offer that in money markets. So, massive, orders of magnitude improvement for Americans. And like I was saying, the real game changer, like you alluded to, is globally. In countries like Venezuela that have like per IMF 10 million% inflation. Like you can't preserve the value of your wealth. Your paycheck is essentially worthless if it's denominated in a currency with 10 million% inflation. You can't use a month's salary to buy a gallon of milk, at that point, next year. And that's doesn't work. It's not fair. It's useless. So now people in those economies can preserve, they can grow the value of their wealth by accessing all the same, financial products like credit and lending and savings accounts and basic stuff that we've always had the privilege of enjoying in the United States. But we can kind of engage those economies and truly have a global economy and a truly global financial system. So that to me is the real kind of the real benefit, the real value in stablecoins as an innovation.
And Tyler, you started out with this amazing start with Barnbridge. How do you see it evolving, and what would you like to do in the future with it?
I would say the first thing that we need to do is release the products. I mean, that's going to be a big win. We have a pool that launches during the next epoch that allows you to stake bond for bond, and we think that is going to help some of like the smaller farmers feel more comfortable kind of like hodling bond. So we're rolling out like gradual implementations of like improvements that the community is asking for. But as far as like where I see it going, I think that just the entire concept of being able to move in and out of risk positions trustlessly from like a TradFi perspective of understanding like what DeFi is and what you can do with it. Some of these like larger registered investment advisors and like investment banks that really haven't dabbled in crypto at all. A major reason for that is because there's really no like risk management whatsoever in crypto up to this point. That's why like most of the groups that you've actually seen, like TradFi groups that have taken major positions in crypto or gotten really involved, have been like Forex and commodity trading companies, because they like understand like the underlying volatility with all of these assets. But if you can introduce like legitimate risk management positions, as well as like introducing like primitives like fixed income into the space, then I think that it's that saying like slowly and then suddenly, like I think that will long term be like the way that TradFi kind of like apes into DeFi, and it's probably going to be in the lower risk positions. I think in DeFi, we're called degens for a reason. We're all very like risk on. So I really see like the progression of Barnbridge being that once we get these products out, I think it's something that not only like degens will use, but I think it's also something that will make a lot of sense to TradFi, and it's not going to happen overnight, but it's definitely a primitive that's needed in order for them to come in. And one final thing I'll say is I just want to give a special shout out to Zapper. Like I'm really impressed with how fast their team ships. And I think when people like are thinking about like the transparency that comes with crypto, if you can like think about like what a Zapper does at like a wallet level, and then you start thinking about that type of technology plugged into an entire lending protocol to give like transparency on like where all of these loans are like going and repackaged downstream, then it becomes like that integrated with something like Barnbridge, like you're basically trading in and out of like positions that you can visualize the risk yourself, and you don't have to have as much reliance on something like a credit ratings agency. So like not only is risk management more efficient on blockchain, but like the trustless like visualizations that you can get out of it are extremely powerful. And like I don't know if Zapper is working on that. I just think if you can show risk at a wallet level, like imagine if you could see it at an institutional level and then apply that to governments, and like, you know, you can really get interesting macroeconomic pictures that you can't do with TradFi.
I can add to what Tyler was just saying here. So I think the key to adoption is we have to continue to provide information that was historically available, to a smaller group of people. We need to make it accessible to everyone. It's a very like power to the people type move. It's basically all the grand narratives we've seen play out on the internet. You've seen, like travel, this is going back to the .com era, like travel, going from a travel agent had all this information, and then it was like, why don't we just make this available to everyone? And then you've got bigger examples today, like real estate, where years ago, who would have thought that you'd have all of this nitty gritty data on real estate to be able to actually decide which neighborhoods have housing that's appreciating in price. Similarly with DeFi, I think going with what Tyler's saying, like we have to figure out ways to educate people in layman's terms about the risk and the reward in participating. It's part of the reason, like, I also have been following Barnbridge closely, and it can be simply explained as this. Someone can put money into one of these strategies, and the ones that are higher risk come with a higher reward. But if you want to take on less risk, you obviously might earn less. That's like how simple it is. Unfortunately, the traditional finance world has done a fantastic job of creating the worst vocabulary that is like not understandable to any normal person. And it happens in every industry, but for some reason we see people continue to perpetuate this language instead of just saying what they mean. And so I think like at Zapper, like we're really lucky because while you have protocols like a Barnbridge that have to work on really specific hard problems to solve and mechanisms, we get to be at the macro level and try to weave it all together to say, would you like to provide liquidity for the bond USDC liquidity pool? Here's a zap, which is a button. Press the button and your money goes in. Do you need any certain token? No, not really. You can start with pretty much any token you want and we'll zap it in. And then eventually you have to stake that liquidity provision on Barnbridge. Very soon, I think within a year's time, what we call a zap at ZapperFi, these buttons will be on every DeFi application, and we will not be talking about staking liquidity provision tokens to earn a yield. You will go into Barnbridge and you will click a button and your USDC will get split 50-50 into a Uniswap pool, and it'll stake the LP token and you'll start earning. All of the complexity is being abstracted away. The challenge is just really at this point staying patient, because it's all happening at lightning speed. It's just a matter of like knowing that future is coming and continually building towards it, and not worrying about banking the unbanked all in one year. Like we've made so much progress, and yes, we were talking earlier about stable coins are even seeing adoption in other parts of the world, like Aiken Sawyer, who's a part of the Barnbridge community, was talking to me about Nigeria. That's fantastic, and like we need to figure out ways to push that forward more aggressively. But at the end of the day, like we're still early, and I guess like I would say for anyone after you've watched all these panels today, you really need to go to like a zapper.fi, or you just need to dig into like some podcasts on DeFi. You cannot unsee the value in our community right now. Money is moving at lightning speed, and it's easy and it's accessible as long as you can manage an Ethereum wallet. And to turn away from that, you're going to have enormous regrets decades from now that like you listened to this talk with us today and you didn't start paying attention to DeFi. It is email for money. It's doing everything that the crypto narrative ever promised. It's just that it's really exploded here in 2020. So, okay, I'm going to shut up.
For those who don't know, DeFi Dad has taught like probably thousands of people how to yield farm and how to use the most up-to-date crypto tools. You can go and see his YouTube channel, DeFi Dad, and that's also his handle on Twitter. I think we have about 10 minutes left, so I want to ask each of you two last questions. One is, what is your favorite yield farming project and why? I guess, Travis, we can start with you.
Yeah, really simple. Any yield farming that actually adds necessary value to a protocol. So I give there are actually two simple examples. One just happens to be Barnbridge. They're bootstrapping liquidity for bond, which is necessary. So it's all about helping to create better liquidity for this bond token, which is necessary for us to make the Barnbridge protocol work. Another one, though, the most obvious, you have to check out synthetics.io. They were the ones who started the idea of, well, they were the ones who really like made liquidity mining more successful in DeFi. And what they've done is they offer on-chain exposure to just about anything, commodities, equities, any sort of cryptocurrency, even non-Ethereum types. And anyways, the only way you can trade those derivatives on chain is you need folks to over collateralize the value that's being traded. So they incentivized everyone holding SNX to over collateralize, and that way folks can trade. And so at the end of the day, I guess what I'm saying is you're not asking people to participate for the sake of receiving some super inflationary token that might not have any sort of utility yet. It's when you look at something and you say, oh, well, this like clearly will make this protocol more successful, and it makes the utility of those of us who want to use the application that much more valuable.
And Keegan and Tyler, oh yeah, Keegan, go next.
Yeah, I think DeFi Dad did an excellent job kind of explaining what Synthetics does, why, how it uses its yield farming mechanism to collateralize the exchange itself. Maybe I'll go, that was my first love in yield farming. It was the first yield farm. I've been staking on Synthetics for like over a year. And they also made me an LP on other platforms. So they're like a great example of how to incentivize composability within DeFi, which obviously is, that's the whole point here, is modular money Legos that are composable, where you can use these assets in a global financial system on various protocols to maximize yield, with kind of the topic of discussion. So maybe I'll just go through a quick example of how SNX staking works, and the various levels of yield farming kind of rewards that you can access via just the SNX token. So it starts with the SNX token. You purchase it on an exchange, on Uniswap, or wherever. And then you stake that SNX and their native app called Minter. And when you stake SNX, you earn SUSD and you earn more SNX. With that SUSD, you can access another level of yield farming. You can deposit your SUSD on Curve, for example. And by, these are kind of all the abstractions that things like Zapper really makes very simple with just one click. But back in the day when I was first doing this, when I first became an LP on Curve, you would go into their UI, you would deposit your SUSD liquidity, and then you would have an LP token for Curve, an SUSD Curve LP token. And with that token, you can access a third level of yield farming. You could deposit that Curve LP token in Wiren, and they're like a yield optimizer. And now with the launch of the Curve DAO, you can deposit that Curve LP token in the Curve DAO itself, earn additional SNX, as well as CRV, the governance token for Curve. So that, that's three levels of various tokens that are all incentivized because SNX prioritize composability and kind of liquidity across the ecosystem as major kind of tenets of their enterprise. So shout out to Synthetics for being the first mover in yield farming and for incentivizing composability.
Tyler, do you have anything more to add? Or we can go to the the last question.
I would just say that, obviously Barnbridge is my favorite yield farm, but special shout out to Synthetics too. I mean, and I also want to say that I think when y'all were talking about like people using DeFi earlier, my advice is like get a MetaMask wallet and put like $100 you're willing to lose in, and just start using stuff. Like I send people to DeFi Dad's YouTube, like even my family, like in terms of like how to learn how to use DeFi. And like, I mean, my like 60-year-old dad like knows how to move stuff around in MetaMask now, and like what Zapperfi is, and like how Uniswap works, and like it's not gonna happen overnight, and like you're definitely gonna lose money. Like I mean, like going back to the really early days in crypto, like I lost a lot of money doing stupid stuff, but it's gotten better and it'll get better from here. So like just put some money you're willing to lose in a wallet and just start playing around with it. And you'll eventually get the money Lego component and composability. Like those are broad terms that like are difficult to understand now, but when you get it, it's like, all right, I got it. I understand why like being able to write if then statements into money across all these other protocols is actually a cool thing.
And my last question for each of you, I'll start with Keegan. What are you most excited about that is going to happen in our ecosystem within the next 1 to 3 years?
Yeah, sure. So I think right now, kind of in the DeFi sector specifically, we're in phase one of DeFi. In phase one of DeFi, I would summarize as just replicating all the existing financial products and services that we have in TradFi, kind of on chain on Ethereum. And you know, despite all the amazing progress and money Legos that we've created and developed already, like Tyler would be the first to tell you that he was surprised that products like tokenized and structured interest rate and volatility risk, that that's what Barnbridge does, they didn't exist. People were chasing kind of like the copycat food farm tokens, and just forking code and doing stuff like that. But we haven't even represented all of the existing financial products where, there's, you go on Investopedia and read about, these products that are kind of core to the financial system today. Not all those products exist yet. We still haven't developed them on Ethereum and DeFi. So that's phase one. And phase two begins once we get to kind of product parity with TradFi. And we start to develop brand new products that are only possible by leveraging DLT and smart contract technology. I'm talking about things like fractionalized real estate, where I can, use the title of my home as collateral in Aave and borrow against it. So I can access the liquidity in my house without having to go through a 30-day refinance, mortgage, pay a bunch of fees to a mortgage lender, whatever. I can access it right then and there. Or things, if I want to long like a Laguna Beach real estate index on synthetics that trades off a Chainlink price feed, a Chainlink oracle. I can do that, long, short, with margin, with leverage, futures, options, you name it, any kind of financial instrument, and most likely brand new financial instruments and products that we've never thought of that don't exist. So that to me is the most exciting thing. Once we canvas all of TradFi and we get it all on chain, we get all those products accessible via Ethereum and via DeFi, and we start to build brand new things, brand new collateral types, brand new derivatives. That's what I'm most excited about.
So we're wrapping up. So really quickly, Tyler, if you could summarize in 1 minute what you're most excited about in the next 1 to 3 years.
I think the same thing that Keegan's talking about, like the ability to create things that you can't create without smart contracts. And like one thing that I tell people about DeFi is like, DeFi is one use case of smart contracts, and smart contracts are one use case of distributed ledger technology. Like we still have to have so to be brutally honest, the number one thing I'm excited about is ETH scaling or any major blockchain protocol scaling. Cause like, this is all not going to happen if we can't figure out some of those early stage gaps that we're just looking at as a foregone conclusion are going to get fixed. But once you fix ETH scaling, you can almost start to, I call this D64, which is a gamified version of you've got gaming on distributed ledger technology. You have messaging, you have video streaming. You can watch sports and play video games and in real time, bet on prediction markets, what's happening in the game, or buy an NFT and go drop it somewhere and actually affect the way that your bet is actually happening. You really start to merge this world of decentralization, finance, gaming, storage, what Filecoin just dropped. It's mind bending what you can do with blockchain technology has the potential to change our lives more than the internet did. But you need the internet for blockchain, so it's hard to say that. But if you think of the future of what this could be, it's a completely different financial world and gaming world and betting world and everything else that you do around entertainment. And that's what I'm looking forward to. But I mean, we need scalability before you get that level of composability. Like, we're not talking about money Legos at that point. You're talking about everything Legos.
So Travis, close us out. What are you most excited about within the next 1 to 3 years?
Easy ETH2 scaling, just because of everything it'll enable, like we've mentioned here. And actually, I guess a few others. It's going to be a great day, I think, when ETH flips Bitcoin in terms of coin market cap, just because that will be a way to grab attention. I don't really care about it. It's just going to be good when it happens. Just
everybody noticed that Travis had DeFi Dad has the Ethereum logo on his shirt.
Yeah, I mean, well, I'm very bullish on Bitcoin too. I hold Bitcoin, but I think some of the narrative of just keeping your head in the sand and not actually paying attention to what's going on, it'll finally be broken. But hey, end of day, my goal is to see the average. I want to see people who got left behind in traditional finance. I want them to participate in DeFi. It's that easy. It comes with lots of education, and I'm biased because that's what I tend to focus on. But all this innovation that's happening, all the investment, like, thank God for the courage of those teams. But at the end of the day, like, we just have to make this more approachable. And I'm as guilty of as anyone. We need to figure out how to find those people who urgently need this, not to go and educate the kid with a college degree from Harvard. Like, I want to see more of what I've heard about, like Nigerians are adopting stable coins and Bitcoin. And I want to see more of those stories. And we need to like really put the pedal to the metal there. So.
Well, thank you so much. It was great, and I'm sure really informative to everyone who watched, including myself. So thank you, guys.
No, thank you, Rahilla. Thanks, guys. Thank you, everyone.
Bye.
Thank you, Rahilla. Bye, everybody.
Bye.